The Goods and Services Tax or GST seeks to make India one market. It subsumes a host of central and state taxes like excise duty, service tax and VAT and is scheduled to be launched on 1st of July. The tax rates have been fixed at 5%, 12%, 18% and 28% with exemptions on certain segments like alcohol and fuel. The GST aims to unify India's $2 trillion economy and 1.3 billion people into a single market for the first time. But the new tax system is much more complex and tougher to comply with as compared to similar regimes in other countries in the Asia Pacific. For instance, there are different tax rates for different goods and services in India, whereas Singapore and Malaysia follow a uniform tax rate which is as low as 7% and 6% in the two countries respectively. Though there are certain exemptions in every country, India is alone when it comes to reduced rates. Also, Singapore and Malaysia allow traders and manufacturers to file their returns quarterly, whereas Indians will have to file it monthly or quarterly depending on the size of the business and once annually. The GST tax structure also differs in Australia and New Zealand. Australia has defined the tax rate at 10% and New Zealand at 15%. Australia allows filing returns quarterly or monthly in case of large businesses. In New Zealand, one has to file tax return half yearly or every 2 months depending on the size of the business. It has taken almost 17 years for India to introduce the GST. The new regime aims to simplify the indirect tax system across the country, but its complicated structure means we must brace for challenging times in the months ahead.